Well, from the broader markets, a couple of stocks, they are moving quite well. Jacket, the erstwhile Sona Koyo, remember the numbers came out. The street has been in wait and watch mode, waiting for that operating leverage ready to take off. The stock has seen a sharp correction, mind you, from the recent peak. But currently it's moved up marginally. Volumes as well picking up on that one. So keep an eye out on that stock from the broader markets. But let's get straight to our movers and shakers then. And Ekta joins in. She has some source space information on Aurobindo Pharma. Ekta, fill us in.
Well, now, in fact, we have accessed the 483, the Form 483, which was issued to Aurobindo Pharmaceuticals with regards to, their Unit 4. Now, Unit 4 is quite an important unit for Aurobindo. It is an injectables facility for them. It was inspected by the US FDA in December. So that particular inspection was from the 3rd of December to 14th of December. And at that point in time, the US FDA issued around 2 observations to Aurobindo. Now, importantly, the 2 observations, despite the fact that there are 2 observations, it's around a 12-page 483. And the first observation, in fact, runs into 11-odd pages. I spoke to a couple of analysts and they seem to be a little divided in terms of the experts with regards to this particular observation, that though, yes, it is probably resolvable and, it might be procedural in nature, it might take a little longer in order to, meet the US FDA standards when it comes to that. So the first observation has to do with to prevent procedures designed to prevent microbiological contamination of drug products which are expected to be sterile or injectables are not established or followed. The second one is quite benign. It's basically protective apparel not worn as necessary to protect drug products from contamination. It's also important to note that Aurobindo had received an injectable approval just soon after this particular inspection took place around the 20th of December or thereabout, and that was for an anesthesia drug which they are expected to launch in Q4. So it will be important to see if they receive any more approvals from this particular facility fast enough, because the lack of approvals also coincided with the fact that the US government shutdown took place. So approvals as a whole started to slow down.
Okay, thank you very much for that. Let's move on to the automotive sector, where Escorts is down close to about 6% after the management lowered the volume guidance for the industry. Sonia, they've also painted a fairly bleak picture for Q4. Walk us through Escorts as well as CEAT.
Well, the key reason for the sell-off that you're seeing in Escorts is because the management has cut the guidance for the full year. They say now that the growth for the industry will be just 10 to 12% versus 12 to 15% guided earlier. They've also cut the guidance for Q4. They say that Q4 growth will be just 3 to 5% for the industry versus a 19% growth the industry saw in Q3. But they do mention that that Escorts will outperform the industry, so they're looking at a 10% growth for Escorts in Q4. But that's, that pales in comparison to the 25% plus growth that they've seen. So now a lot of the street is marking down their earnings estimates post the guidance cut that came in from the management. The management also spoke about how FY20, the outlook remains uncertain because of high base and monsoons. And they did also mention that the margins could be under pressure. As numbers, the agri margins have been under a bit of pressure, down about 40 basis points year on year, while the other segments are looking just fine. On CEAT too, I just wanted to mention quickly that the revenues were below estimates with a growth of just 9%. But the big problem really has come in the operational performance. The margins have fallen 70 basis points quarter on quarter and 360 basis points year on year, despite gross margins being better. That's because the other expenses for the company have surged substantially, and the debt equity ratio has also worsened. So, weak numbers coming in from CEAT as well as Escorts paints a bleak picture for FY19.
Okay, all right. Thanks so much for that, Sonia. Well, Ekta, coming back to you, tell us about Dr. Reddy's.
Well, Dr. Reddy's is higher. There are a couple of developments, both positive and negative for the company. First is Suboxone. Remember that Suboxone is that particular opioid drug that is currently in the courts when it comes to Dr. Reddy's and that particular relaunch of it. In the past few weeks, however, companies such as Alvogen have received approval for this particular drug. Plus, as well, we now know that there is an authorized generic for this particular drug, which is Sandoz. So there is more competition, which is likely once Dr. Reddy's, if in case they do also manage to relaunch the drug. The particular litigation is currently going to be heard by an appeals court against the, in the US at this present moment, and we should probably know the outcome in the next couple of days or weeks. Separately, the company has received an approval for an anti-migraine drug, which is DFNN-02, and the sales potential, according to Credit Suisse, should be around $60 million. Now, there is a possibility that there could be some amount of shift of market towards this, considering that it is a nasal spray drug which is used for migraines versus, an injection which is available. So obviously a spray would be much more easier for somebody to probably take. And separately, the company's API plant at Miriala Guda has gotten inspected by the US FDA. It received only one observation. It's important because remember that this particular plant had first come under warning letter in 2015. After that, in 2017, it was again re-inspected. It had received around 2-3 observations at that point in time, but it was classified as a voluntary action indicated from the US FDA. So this particular plant continues its positive status with the US FDA, which is a good thing for the company.
Okay, thank you very much for that. We're also looking at persistent systems, so that's higher in trade. Net, it was a mixed quarter, so there was a revenue miss, but margins were a beat, and there was a buyback, which will support the price. So on the top line, in fact, disappointing for the 6th straight quarter in a row. We were estimating a revenue growth of 4.5%. The company delivered a 2.2% top line growth. The miss came in on the alliance revenues, coming in lower than what the management was earlier expecting, because the license revenues, which were sold by partners, did not come in time. Also, if you look at the 9-month performance for Persistent, the revenues are actually now in low single digits at only 2.6%. The positive in the numbers was the margin performance at 15.1% on account of forex, higher pricing, improvement in utilization, as well as an offshore shift. And the management says there is scope for improving the billing rates even further. The kicker, or the reason why the stock is higher, is on account of the buyback. It's a tender buyback. The buyback size is 225 crore because it's an open market buyback. I apologize, not a tender buyback. It's an open market buyback, which means at a maximum price of 750 rupees. That's about a 33% premium to where the stock is currently. And because it's an open market buyback, the promoters will not participate. CLSA has a buy rating on the stock due to cheap valuations and the buyback, but they have lowered the target price to 700. Citi upgrades the stock to a neutral.
Okay, all right. Thanks so much for that, Rima. Well, Adani Group stocks, they recover after a sharp fall in trade yesterday that was caused by high leverage concerns. JP Morgan highlights there is no stock-specific negative fundamental news in Adani Ports. Anisha is with us. Anisha, run us through all those details.
Oh, well, yes, as you mentioned, JP Morgan believes that there was no fundamental news to trigger the sell-off that we saw in the Adani Group stock yesterday. So they say that perhaps it's the rub-off effect of Z and the high pledge and the leverage that made the stock stumble in trade yesterday. Now, in fact, they say that for Adani Ports, the balance sheet actually looks healthy and the company might be able to deleverage its balance sheet further, given what they're planning to do in terms of unlocking the value with the LPG and LNG ports at Dhamra as well as Mundra. In fact, they say that the Q3 numbers that are expected on 6th Feb are expected to be good because there would be a forex currency movement impact on the numbers, and that could act as a near-term trigger for the stock. For Adani Port, they say that the Mundra power plant resolution is the key trigger. The next hearing on that matter is 4th February, so they're watching out for that. But if you look at the data that they have pulled together, as far as the promoter pledge level is concerned, for Adani Ports, the pledge has actually moved down from 47% to 45%. And even if you look at the likes of Adani Transmission, etc., the pledge was high at 54%, but on a quarter-on-quarter basis, it has come down at 44%. So the matter of the fact remains that these pledge holdings for Adani Group stocks have always been high, and if at all, there has been an improvement on a quarter-on-quarter basis. In fact, the company also came out with a release yesterday talking about some more release of pledge that has happened. As far as the leverage and the debt figure goes, well, we know that the debt is high. So the gross debt of the entire group is over 100,000 crore rupees. And for the likes of Adani Power, it's at around 53,000 crore rupees, making the net debt to equity as high as 58 times. But for the rest of the group stocks, especially Adani Ports, it's pretty manageable at around 0.9 times. Talking about the other parameter, and that is the debt to EBITDA figure. Now, that also remains high for the entire group stock. So anywhere between 3 to 10%, and that should come up for you on the screen. So yes, debt remains high, pledge remains high, but that has always been the case. I don't see any trigger for the stocks to sell off.
Okay, thank you very much for that. But Anisha, we're not going to let you go so soon. Fill us in on the other numbers that we should look at today.
Well, yes, a lot of stocks are buzzing in trade today. And in fact, we should get up that list on the screen because there have been a lot of triggers that are causing a lot of these stocks to move. So first up on my list is actually Adani Gas from the Adani Group because they have got some favorable order from the Supreme Court in order to get the city gas networks. And this is with regards to Jaipur as well as Udaipur. So the stock moved higher around 5% on back of that. DHFL was also in focus. That has raised around 1,400 crore rupees via securitization, and this is from Oaktree Capital. The stock is actually down in trade. I think it's just the movement that we are seeing in the stock, but nonetheless in focus. HEG, that one continues to be in focus. In fact, the entire graphite stocks are in focus. Today, perhaps the trigger could be that the circuit filter has been revised from 20% to 10%. So HEG on focus on account of that. Z Media has been down about 5-6% from the start of the day. There has been some resignation of the independent director on account of that. The other stock that we have been talking about is Praj Industries. Now that one continues to gain. That's up around 16% now after the revenue increased by 33% on a year-on-year basis. And look at the profit figure. 22 crores versus 7.5 crores. So there's definitely that ethanol story playing out. Bajaj Amines, that's not the story for that. Both the amines as well as the hotel business has disappointed. The profit is down about 7%. Ramco Systems, well, it has reported a loss versus a profit last quarter, and that's why it's down about in trade. Bank of India and the other public sector banks have been in focus. We have been seeing those ticker lines. So those are some other stocks in focus.
Okay, all right. Thanks so much for that, Anisha. Well, in terms of DHFL, the stock is under pressure today. Yesterday as well, it was under pressure. 2 days, the stock has lost 16-17% approximately. In terms of market capitalizations, nearly around 800 crores. Their disbursements were less than 600 crores in the last quarter. So that stock as well has seen quite a lot of selling. If you just pull up the last couple of trading sessions, you'll see the stock ended at around 210 in Friday's trading session. It's corrected all the way to around 175 rupees as well. 800 crores of market capitalization loss just in 2 trading sessions. Well, we'll do a quick recap, I think, of all the buzzing stocks that we just covered. We have Aurobindo Pharma, Escorts, CEAT, Dr. Reddy's, Persistent Systems, Adani Group stocks, that's Adani Ports as well as Adani Gas, DHFL, Praj, Tata Power, Bank of India, Chennai Petro, as well as Strides, Bank of Baroda, BEL, Ashoka Bilcon, Ajanta Pharma, and finally Cholamandalam.